Hey, Leonard.
Happy New Year.
Happy New Year to you as well, sir. Just getting warmed up for some good discussions. I don't know, something in the air or something, been a little under weather today, but hopefully we'll pull it through. Hoping to have some nice discussion for next 90 minutes or so. Uh, like I was saying, we took a little break from the session during the holidays. So now feel good to be back in our regular schedule. It's good sometimes to take that break and get out of our regular stuff. But good to be back. So with that, let's get going. What I want to focus today, and again, if you're joining here for the first time, I do see some new names here. So we meet here every week. Thursday, 6 o'clock. Our intent is to learn more about crypto economy, how we as a retail investors can participate in this new economy. Right? But my focus mainly is around studying the products, getting familiar with this ecosystem, and build our investment thesis. Mostly from a long-term perspective. I generally don't focus on a quick trading opportunities. Reason is I'm a part-time retail investor. We got our own other full-time jobs and the work and families to take care of. So I cannot dedicate time to sit in front of computer to do day trades or some quick trades. So my intent is generally to focus on the long-term perspective, and of course, try to understand this ecosystem, stay abreast on what's happening here. This is like an internet of 1990s, early 1990s. So things moving very fast, and we all want to learn together in this, I would say, crypto economy. So as always, I wanted to go through the funds flow report. So before that, Happy New Year to you all. I am so glad to put 2021 behind me, as well as 2020. Hopefully 2022 is going to be great. And all the issues that we've been seeing for last 2 years, we can now put behind ourselves and look forward to doing some great things in 2022. So I wish you all a very happy new year. And as always, let's first want to talk about the funds flow report. I also had a few news items. If you have any other topic you want to talk through, feel free. This is more of could be a discussion forum, but I do have some content that I generally read up on the week and want to share what I learned. If there are some other projects that you want to focus on or some other topic that you want to talk about, feel free. Just put it in the chat and we can easily switch to a different topic. Again, the intent here is to learn together. So it should not be just me talking and dictating the direction of this or the topics that we want to talk about. It's for you all. So if there is any specific questions that you may have, or a specific token or a project that you want more information on, or you want us to dig deeper, let's bring that up. But if you don't have those questions, and that's why I have this content which I'm sharing right now, is hey, let's start a discussion with something that I have seen, and then we can take it up from there. Right? But it in no means that we're going to discuss only this. If there is something else, let's bring that up. Please include the link to the report in the chat. So I actually will post it on the website. So let me just show that to you. So I can give a link to the website. So if you go to our website, if you come to Crypto Meetup, so you will be able to see the previous meetup recordings as well as the report. Recording I also posted on YouTube. So if it fancies you to keep abreast of some of the other YouTube videos that I post, and there are not many because, hey, I'm not on a full-time on a YouTube stuff, but I do post sometimes a video. So we do have a weekly crypto meet. So Option Gig is the channel name. So if you want to get notified when the video goes out, you can subscribe to the channel, or otherwise you can just come to this page. Let me just put this link. So yeah, so you can see the previous reports and the recordings over here. So last we met was on 23rd. So you have the document as well as the recording. I see. Can you include the link on this? Okay, site extension page. Cool. All right. Yeah. So if you miss it, you can see it here. So starting with our funds flow report on a weekly basis, we have been seeing little weakness in the market. All type of markets which are considered to be relatively little risky as compared to the risk-free or safest bets like treasury bonds, etc. So as if you've been active on the stock side, you would have noticed Fed has come forward and told that they're going to increase the interest rates sooner, probably in March, and that has caused a lot of concerns generally in the stock market. So if you look at and including, let's say, S&P 500 or a broader market. So if you look at SPY, it fell down a few percent. More importantly, the markets or the stocks that are considered a little more risky. Tech stock, it's down a lot. If you look at the high growth earning stocks, say like Teladoc, these are the companies which don't make money right now, but are expected to make money way down in the future, right? This is a telehealth company, had a tremendous run when the interest rates were zero, all the way in 2020. Stock used to be around $60, $70 in 2019, went up all the way to 300, and now it's coming back down. Take any other, let's just Pinterest, high flying stocks, all going down. Stitch Fix, similar trajectory. So all these companies, Roku, those which are not profitable right now, but are expected to make money down the line after a few years. Now with increase in the interest rates, the attractiveness of these companies becomes less. And so these companies generally are considered a little riskier than the rest of the market. And the crypto assets fall in the same bucket, or rather a little more riskier, considered a little more riskier. So we are seeing similar impact on the crypto markets. If you look at a year to date, I know this is only 6th day of the year, all assets are down. Bitcoin is down almost 8%, so is Ethereum. If you look at their normal trajectory over past few weeks, after hitting an all-time high of around, oops, this is the wrong one. Where's my BTC USD? There we go. After hitting all-time high of around 69, it's been downward trajectory. So most of high growth stocks, I would say those high beta or high risk stocks, as well as other assets like crypto, just are following what's happening in the general market. Increase in interest rates would make other avenues of the safer avenues of investment more attractive. Right? Now, if I can get a little more higher return, then because of an increase in interest rate, why do I need to invest in riskier instruments like high growth tech companies, high growth, those EVs that don't make any money right now, or crypto assets. So from a market's perspective, the picture isn't great. The It's been all over the red. So Bitcoin is currently now just below 43. It was at around 69 a few months ago. Same is the case with Ethereum. I think most of them are coming in red. But that's okay. That's what market does. Market does what it does in a short-term period. If we spread out our outlook and look for last 1 year, not bad. 30% in 1 year on BTC side. Ethereum up 200% for going back 1 year. Not bad at all. If you expand our horizon further, look at a BTC performance for last 10 years. This has been the best performing asset. But then how about last 3 months? Just don't even talk about it, right? So what market is what it does, depending on a lot of other factors and not just business. So I want to focus on what the business is doing. What are the stuff happening on BTC or Ethereum or whatever project you want to talk about. So two types of investors are there. Some who want to focus on the market, what is market telling, and who want to focus on the business side, what's changing on the business. I tend to focus more on business side and then look at the markets, what's market is telling us, because my outlook is a little longer than maybe usual investors. So what happens in a month or 2 months doesn't really matter. I just want to make sure that the long-term thesis is still intact. From a business side, things are still happening, innovation is happening, solutions are coming up, adoption is happening. And I don't see any change in that in last 2 or 3 months, irrespective of whatever has happened in the markets. So, but it's been tough market out there. Look, quarter-wise, if you look at performance, Bitcoin is down 17%. In a month, it is down 13%. Ethereum is down 8%. It's not easy. But that's what market does. What market does. It'll go up and down based on what's going to happen tomorrow, not necessarily a few months or a few years down the line. Question: who is adopting new crypto projects? Depends on the project to project basis, right? So within the Bitcoin, there's been I would say a lot of not Bitcoin generally is stable. So from adoption perspective, the only thing that we've seen adoption on the Bitcoin is on the payment side, the usage of the Lightning Network. I don't think, but I can pull up Lightning Network stats. Network total value logged. Where is it's been what 135. So Lightning Network is talking about Bitcoin. Lightning Network is the solution for doing instant payments on Bitcoin. If you try to pay on Bitcoin through the regular one, it's slow, right? That's why I say it takes 10 minutes to do a transaction. But Lightning Network enables quick and instant payments. That's what is being used in El Salvador for your regular day-to-day Bitcoin transactions. And if you look at it, over the last 1 year, the amount of money logged in Lightning Network has been increasing. So I am bullish, still continue to stay bullish on the adoption of Bitcoin. Right? Similar case on Ethereum. There are a lot of scaling solutions coming up. We talked about a few scaling solutions in some of our previous sessions, right? Optimism, Arbitrum, Polygon, a lot of DeFi solutions are coming up. So in fact, today we want to talk about the DeFi the decentralized finance, what you can do and how to stay safe in this DeFi world. Nowadays, I would say last 1 year, there's been an explosion in the NFT market. I mean, that's the reason why this whole Ethereum market has taken, let me put NFT growth. Let's see what it shows up. The NFT sales surged to 10.7 billion. Right? In some cases, it could be crazy, right? But there are a lot of interest among the artists or the celebrities on creating their own tons of NFTs, which is a non-fungible tokens, right? Recently, I think it was yesterday or a day before, in this NFT exchange, OpenSea, they had a recent funding. I think that is valued at now $30 billion. So there are use cases, and now depending on our outlook, you may think what's the use case of NFTs, but there are indeed people who are investing in tons of these NFTs. So there are different use cases coming up, right? So DeFi has got different one. The total value getting logged in DeFi over the last 1 year has also increased. We're going to talk about DeFi a little bit, after that. So from that perspective, yes, there has been growth in overall crypto projects. There has been more awareness around the crypto. So we look at, it was today's news, one bank in Switzerland is quietly getting into DeFi, will enable its clients to buy and hold some of these tokens. What was the Comp, Phantom, Aave, Compound, Synthetics, Matic, Graph. Why is bank doing it? Because they are getting demand from their customers. So, say question, how can we learn the process of making and selling NFTs? You can go and explore on OpenSea or around that. I haven't done that, but again, I have my own thoughts around what I'm seeing on an NFT space. This is similar to an art. NFT is I would say a digital art, right? Today, my personal perspective is this has gone way bubbly right now. Anyone and everyone is creating an art. And I think people are just throwing in money to buy some of these NFTs left, right, and center. Bored Ape, Yachts Club, some NFTs are being sold for $1 million. I don't know. I mean, I don't see value in it, but who am I to judge? If you look at some of these NFTs, past 1 billion. So the NFTs for these Bored Ape Yachts Club, now it's past total $1 billion in sales. There is money to be made. But now my perspective is that there has to be history behind it. The value lies in the history or in the credentials of the artist who is creating it. I don't think that the process of creation is not difficult. If you have a digital art, you can create your account on OpenSea, register it, and kind of a mint on NFT on this one. But now the bigger question is the adoption. Why would someone buy an NFT from me? Either I have to be a known artist, or there has to be something which is unique in this. Otherwise, anyone and everyone can have these GIFs. So if I want to get a picture of this, I can just download, right click and save it. But I don't have the credentials to prove that I'm actually an owner of it. So be careful on this whole NFT. For me, my personal opinion is, hey, it has run up too much too soon, and some point of a time reality will set in. I think the real artists will survive. It's a great technology, but right now it is just being used for selling, I would say, GIFs. It's the same thing, internet comes in. Most of the time, internet was just being used for either playing games or chatting. The business use cases came in way later. I think that's what's happening with NFTs right now. But the technology is exciting. The use cases are exciting. We have to see those business use cases really built using these NFTs. So let's look at the funds flow report. The final week, the third week, saw a little bit outflow. So funds flow tracks the institutional money going into various of these crypto assets. And this has been almost 3 or 4 weeks. We are seeing an outflow. Means money is moving out of crypto assets. People probably are selling it and converting into and holding cash, which we have seen in markets. Most of the assets which are considered as risky assets have been down. Right, so no different than what's happening on the crypto. But essentially, overall, if you stretch our outlook and look at an annual versus an annual summary, the yearly inflows have been up 36% in 2021 as compared to 2020. So overall, asset under management is now close to $63 billion. It's not a small amount. It's a $63 billion log in many of these institutional funds, or you can say which is equivalent to maybe say a mutual fund, in which institutions, individuals, people like you and I want to take an exposure. If you don't want to hold or deal with crypto exchanges, we can invest in these instruments which hold and invest on, in these crypto assets. And that asset under management has now grown to be 62.5 billion. Bitcoin saw a total inflows of 6 billion, a year-on-year increase of 16%, whereas this was the lowest growth relative to other digital asset investment products, which really shows that this market is not controlled by only one project. The overall dominance of Bitcoin is slowing down. It's not because the interest in Bitcoin has come down. It is because the interest in a lot of other projects or other crypto assets has increased. So the overall pie has increased a lot, and hence the share of the Bitcoin has decreased, which is good from overall crypto economy perspective. Right? And not only that, the overall number of coins in the investment product has expanded to 15 in 2021. Investors, whether those are hedge funds or institutions or retail investors, are moving beyond some of the top names. They're moving beyond Bitcoin, Ethereum, Litecoin, and Binance, Polkadot, etc. So there are total 15 coins on which we are seeing a lot of interest coming in from institutional investors, and because there is interest, total 37 products were launched in 2021. And these products could be ETFs. These products could be your mutual fund or the trust funds. I don't think there is a mutual fund, but there's a trust funds in the ETFs. What are the 15 coins? You could look at a Grayscale Bitcoin, Grayscale Trust Fund. They are the biggest one in United States. So let's look at Grayscale Investments LLC. And look at their investment products. So, okay, come on. So they got basic attention token, BAT, BTC, Bitcoin Cash, Chainlink, Decentraland, Mana, Ethereum Classic, Filecoin, Horizon, LivePeer. These LivePeer, Solana, they all came in 2021. I guess even the Horizon. And a few more, Stellar, Zcash. So Grayscale is the biggest one among all the trust funds that hold Bitcoin. So yeah, these are the 15, 16s. And then you can get into details around, who holds what. And yeah, Live Peer was launched in March last year. Solana was launched in November. Why? Because there is a demand from investors on this. What are the coins that Swiss Arab Bank is investing in? So Swiss Arab Bank is not investing in coins. All they're looking for is provide an ability for their customers to buy and hold these coins so that they don't have to. So today, if I were to, or if anyone have to buy a crypto asset, I can't buy it from my brokerage firm. I cannot buy it from my banking website, banking institution. I have to open separate accounts with some exchange. So what this Arab Bank, which is I would say it's a subsidiary of Arab Bank of Jordan. It's a big bank. It's got $85 billion asset under management. What they are planning to do is to give an ability for their customers to buy some of these crypto assets directly from their bank accounts. We might see this in US, but probably it's going to take some time. The reason why I'm a little hopeful that we could see this in US is, number one, the changes in the regulations by OCC is, there was a proposal by OCC. I think it was already approved by OCC, by the way, is a regulator for all the banks that operate in US. There were some favorable regulations around the custody of crypto assets, which means now bank can act as a custodian. Means if I were to buy, let's say, any crypto asset through my bank, then someone has to procure it and hold it safely. Right? So there was a regulation passed which could allow these banks to become a custodian of digital assets. And also last year, the FIS had partnered with NYDIG to bring on an ability to buy and custody these crypto assets. Now, many community banks, almost, I guess, the number of accounts with those community banks is almost 300 million. Those community banks use the system which is provided by FIS. So that partnership was done somewhere last year, because I think it's, from a business perspective, I guess the banking sector, the financial sector knows, the traditional banks know that they have to get into this. It's just a matter of time. It's just a matter of getting all the regulations in place, that they have to start giving exposure to these crypto assets to their customers if they really don't want customers to take their money out from the financial institutions and start, moving into either the crypto exchanges or other DeFi protocols. So doesn't show up in the market right now, but these are the long-term, tailwinds that I was talking about. Business side, I'm still excited about it. I don't see anything wrong in the thesis of business. Adoption is growing as a retail investors. Institutions are moving in. Now the banks are preparing themselves to be ready to offer, at least from an infrastructure, to get all the partnerships in place, to have all your infrastructure available to allow their customers to buy and hold crypto assets. It's just, once the regulations and everything gets clarified, people will, I do expect these banks to start offering it. So Switzerland, the Arab Bank in Switzerland probably is the first one, a real bank to do it. But my opinion, it would be a matter of time when the US banks start to do it. So that was around a annual. I'll look at a weekly and annual wise. I don't see any slowdown if I look at what happened in the last 1 year. The overall adoption is still growing. I don't know what your opinion is. So last 3-4 months, what's been happening? Yeah, it's not good. It's not good if you look into your portfolio and see the things in red. But come on, what those 3-4 months are when we are looking for these technology to change the world over the next few decades. So what does 3-4 months mean in a decade? Right? We'll live through that. Let me sip some coffee. Yeah, next I wanted to talk about what's around the DeFi stuff, which is decentralized finance. This is one area that's been particularly interesting for me personally, is trying to use these crypto assets to do something. I think, Leonard, you had a question. What are people doing with some of these projects? Right? It's is it just buy and hold speculation? In some cases, it could be. Some of these NFTs I'm seeing is just buy and hold, and hope that someone else will be willing to pay you higher than what you bought it at, right? Just like art. And you're just waiting for some greater fool to buy it from you. Hopefully, you got some good, I would say, painting, or from a reputed artist, which will go up in value. Many of them will just crash and burn once this own mania will set in. So, is that the only use? No, there are a lot of other financial services that are being built in this crypto economy. So that's called this decentralized finance, right? DeFi. Now, DeFi means you can do certain activities like what we do with our normal banking. You can lend, you can engage in lending or borrowing or investing, means investing regularly, investing like you do through a brokerage account, on exchanges and on platforms which are decentralized. So if I hold some crypto assets, and for my long-term thesis is I want to hold it for next 10 years, but how do you get some yield out of it? So there are exchanges, DeFi exchanges, wherein I can go and lend the crypto assets that I own and earn some yield. So similar is the case with borrowing. If I want to borrow something for whatever investment or trade that I want to do, I can go ahead and borrow some of these on these DeFi exchanges. So they do offer all the benefits of financial products, but they have a relatively higher interest rates than what I get it on my CDs. And we'll look at some of those CDFI as well. Let me just bring up another one, a platform called Aave, which is one of DeFi platforms. So hold on. Yeah. So we'll look into that one. Number two, in the regular banking, the returns are very less. I mean, it's a 0.02%, and your bank will tell you that you are in a high yield savings growth and savings account, and the APY that you get on it is 0.02%. Come on, why would I do that? If I can get some nice APY on say Aave, right? So I just pulled up. Aave is another DeFi platform. There are many. Aave is one of them. Compound is another one. Curve is another one. There are a bunch of them. And if I get $1 and convert it into a USD coin, which is a stable coin, and I deposit here in Aave, I can actually make 3.18%. So why would I put it in my bank CD, which is offering me 0.02%? Or for 5 years CD, it'll offer me, 1%. So that's the reason now these traditional financial institutions, generally called TradFi, they are noticing this. They are noticing that the people, their customers, those who are becoming more aware around the crypto and the DeFi, are moving assets out of their banks and making use of these DeFi platforms. So if I hold some other crypto assets, I mean, there are very you can generate some yield out of this, right? So this is Aave, which is a decentralized exchange. I mean, you don't have to create any, sign up with it. So the way all these decentralized exchanges work, most of them work, is you connect your crypto wallet with it. And then based on whatever assets you hold in your crypto wallet, you can either lend those assets onto this platform. So if I hold say Chainlink, or let's say, which one? Let's say USDT, right? Or Gemini dollars. These are the stable coins. So the value doesn't fluctuate, right? If you look at a Gemini dollar, let's look. Let's go to Coin Gecko and look at stable coins. Stable coins. Oh, all right. So there are a bunch of stable coins which are equivalent to of a dollar in the crypto economy. Means their value stays close to the dollar. The biggest stable coin is Tether. The another one is USD coin. The reason why I'm getting into this before I jump back into Aave is just to understand a type of what's the use of these platforms. So if you look at a USD coin, it does fluctuate a little bit, but generally it will stay close to a dollar value, right? Let's say 1 year max, it's fluctuated between $1 and 2 or 3 cents, and 98 cents, 99 cents, right? So if I'm holding my US dollar in my bank account, rather than holding it in my bank account, what I could do is go to my crypto exchange account, convert that US dollar into USDC, and I've taken out, I'm not taking any crypto volatility because the USDC stays at $1. Then I can come to Aave and deposit my USDC to Aave and make 3.18%. So this page shows you what are the digital crypto assets, right? And totally on this platform, what's the value of, how many, the value of the total these DAIs borrowed by different users, right? Someone will borrow it, someone will lend it. That's all happens on a banking. In this case, unfortunately, in a bank, I cannot go and lend it because I'm a common retail user. Bank doesn't give me that much of a respect. I cannot tell a bank that, even though bank lends our money, right? That's all the fractional banking is. I deposit my money in a bank, they give me 0.02%, and bank will lend it out to others for mortgage or for car loans. Bank will make 4%, 6%. All I get is 0.02%. Here on Aave, if someone is borrowing it, they have to pay 3.96%. But DAI is a stable coin. But if I'm depositing this a DAI or Gemini dollar or USDC, I get to make 3.18%. Right? So the difference between these 3.94, 3.18 is the margin that this company or this DeFi platform makes.
Can I ask you a couple questions?
Sure.
About this? Okay, so Gemini dollar, it says in deposit APY, that means that they're paying 8% per year?
Correct.
Okay, so if I go over to SUSD underneath Gemini and borrow something for like, let's say it's 3%, and then deposit it in Gemini, then I'm making 5% profit.
No, so in this case, SUSD, right? So you'll have to convert this SUSD into Gemini dollar. First of all, you have to figure out where this swap happens, right? These are all separate digital assets. These are not fungible. You can't just think these are how would I say? This is like
like different currencies, like
different currencies, but all of them are stable, right?
Okay, so but if they're all comparable to $1,
but
if I can go ahead and borrow, so if I borrow $1,000 worth of SUSD and put it into, and again, I don't just like I don't know how to transfer my money from dollars to Swiss francs. I don't know how to do this part here. But if I understood the technology, if I borrow from USSD, which is 3%, and then find a way to deposit it in Gemini, then I make 5%, right?
you're not depositing in Gemini. You have to convert this SUSD into Gemini dollar. First of all, you have to find it, if that even the pool exists where you can actually convert or swap it. It's
Okay.
like you mentioned, right? These are different currencies. You'll have to convert one currency into another.
Okay, and I might have to go through 2 exchanges to do that. But
yeah, you might have to go through, let's say, Uniswap or some exchange where there may be a liquidity pool, there may not be a liquidity pool. Right?
okay,
So
but if I can get from USD to Gemini, then I would be making 5%.
if you can convert this into and borrow at this, and then convert it into a Gemini or a GUSD and deposit it here, yeah, but you'll have to pay whatever the conversion fee would be. Number two is when you're borrowing it on at 2.90, you also will have to stake something here, right? When you're borrowing it, you're borrowing it against a particular other asset. But yes, that trade would be feasible.
Okay, so if I'm borrowing, in order to borrow money at 2.9, I need to, like, let's say $1,000. I need to go ahead and put in $1,000. I need to put in $1,000 at the 1.32 interest rate.
So when you're so it won't be $1,000. So you may have to deposit, let's say, a Bitcoin. Let's see what all they have, right? So okay, I don't even have anything. So I've done for, not for SUSD, but I've done for others. So you have to deposit, let's say, or ETH or Bitcoin.
Okay, do you have another scenario? You understand what I'm trying to figure out? Do you have a different scenario that you could show me how you would go ahead and basically, isn't that this called triage?
No, so let me just see if I can show that out. Right. So here's an example, right? I have deposited some ETH in here and I borrowed USDC out of it. Right. I borrowed this as 3.92%. Okay. Now what I do with this is these 3.92%, where I borrowed at 3.92%, I actually, okay, we are jumping ahead, but that's okay. I actually moved that out to Celsius network, in which on the Celsius network, if I deposit USDC, I get around 8.5%. So and I have done that. And your question earlier was, what do people do with this? Like I said, I have a long-term thesis on Ethereum, and I bought some. What am I supposed to do? Rather than them sitting on my crypto wallet, I make use of these DeFi platforms. I deposited my ETH against that ETH. It's like a collateral. It's like a collectible I have. If I have an art piece which has got value, I can deposit it. I deposited my crypto asset on Aave, took out a loan on USDC at 3.92%, and moved that to a different. It's like taking a loan from one bank at 3.92%, and depositing it in another bank, which is giving me 8.5%. So things like these are pretty common. You just need to understand the risk behind it. And that's what I wanted to talk about, is what are the risks in these, right? And for me, it was a good deal because hey, my thesis around Ethereum is I want to hold it I don't want to sell it. I don't care where it goes. So rather than holding it and earning nothing, at least I can make a differential between what I'm paying for and what I'm earning here. You get the point? So that's an example trade, right? I borrowed these USDC by depositing my crypto asset. I'm paying 4%, and then I pick that up, put it onto Celsius, make 8%. The differential is my earning.
Okay, but then what I heard you say is that you took Ethereum, which you like to hold for the long term, as a long-term investment, and you took some of that Ethereum and turned it into one stable coin
I didn't turn it into, I didn't sell it. It's like I'm living in my home. I want to live it, but I took a mortgage on HELOC on my home.
Oh, okay. So you borrow against the Ethereum.
Yes.
To get the stable coin to put into another network.
Correct. Right. Now, the risk that I would run into this is if the value of Ethereum goes down, right? My loan to collateral value, if it goes down, they will sell my Ethereum, right? So you got to be careful, that you don't, if my Ethereum today is worth, say, $5,000, I don't want to, in that case, I don't want to borrow. I mean, they won't let you borrow more than 80% of your value. The LTV is maximum 80% because all these loans are over collateralized. But I don't want to go ahead and borrow $4,000 because what if Ethereum falls down tomorrow? Because these assets are volatile, they'll just sell off Ethereum to recover. The protocol will immediately sell off my Ethereum to recover the money. But I can borrow 1,000 because I know, yeah, Ethereum is volatile, but I don't think it will fall down 50%. And keep an eye on the value of Ethereum. So based on that, then yes, some of these things will work out. So the risk that I ran was if Ethereum falls down, there's a risk of liquidation of my asset, which I may not have wanted to sell it. And then, I have to worry about my capital gains tax and all that. That depends on at what price point you bought Ethereum and all that. So this is one example of DeFi, right? You can earn some yield on the assets that you hold, but the yield is much better, way better than what I get from traditional banks. So here's another trade. Even if I don't want to hold any crypto volatility, right? Again, not a financial advice, but just from education perspective, right? I have an account in Coinbase, right? And this is what I've done. So for this DeFi was depositing an asset and taking a loan against that collateral. So I don't have to spend any money out of it. I already hold that asset. It's like buying a loan against your home and then using that money to generate additional yield. Right? Now, the other thing which I have also done is take money out of my, let's say, bank savings account where I'm getting 0.02%, send it to my Coinbase account, take USDC because this is 1-to-1. So took $2,000 out of my savings account, move to Coinbase, get $2,000 USDC and deposit it to Celsius or some of the other others to make some 8%. It's a way better deal for me because, hey, banks are giving me only 0.02% and this is giving me 8%. So the question is, someone will ask, why not everyone is doing it? What's the risk? There is always a risk, right? There is nothing, there is no reward without the risk. One risk is my CDs or savings account is FDIC insured. This is not insured. That's the risk which I'm willing to take for some portion of my net worth.
What is the
difference between these?
The risk, depending on, because all these stable coins must be different. If you have a stable coin with a transparent, has a transparent project and has a huge investment, capitalization, then doesn't that make it more secure?
Exactly, you hit the nail on the butt. You have to understand in terms of where you want to put in, right? I picked up USDC because number one, it is backed by Circle, which is a regulated company. Number two, all the assets, the way these stable coins are kept at $1 is each of one stable coin has to be backed by equivalent amount of some asset, right? These companies cannot and create a USDC just out of thin air, right? And if that is the case, which is there are allegations that USDT is doing it. This is a Tether FUD. If you go and search for Google for Tether FUD, the one big FUD that's been, that comes up again and again in crypto economy is the company behind USDT is just creating it like a Fed creates the money, right? There is nothing which backs the creation of a US dollar from Fed. And the same is the concern on USDT, that it's not backed by anything, but no one has been able to prove it. They have started sharing in terms of what backs it. Why I'm more comfortable with USDC, and that's why I've been talking about USDC, is they have shown the audit reports that each of the USDC is backed by either dollar or treasury, which is very safe, right? So I know if this company behind this, USDC, and how many USDCs exist today? Its market value is now $43 billion worth of USDCs are circulating in the market. Then I have faith that there are $43 billion worth of assets which this company behind this has. It's a combination of Circle and Coinbase. Right? So I have more faith on it. I may not have a faith on some of the other ones. They might have been generated out of thin air. And what could happen is, in case of any irregularity, these could just go to zero because they're not backed by anything. And again, I don't know whether they're backed by anything or not. But I do know that USDC is a US-based company. It's a regulated company. It's a Circle DC, right? So this is a company behind fully reserved. It's being backed by full reserves, and I'm comfortable. So I don't have the liquidation concern. I don't have the concern that if everyone tries to sell their USDC, this company won't be able to honor that sale, because they do have a reserves which back these the digital tokens, right? Our banks don't have it. Banks run on fractional banking. but these are, from that perspective, I would consider these are safer than the banks. But yeah, that's why I was giving example of USDC. And Gemini also, I'm a little okay with it because Gemini is a US regulated crypto exchange. Paxos has been coming up a lot more nowadays because they are working with a lot of these. Paxos is behind PayPal. I think Robinhood use Paxos. So if you're buying crypto assets on PayPal, it's the Paxos that manages everything. Or PayPal has given us a gateway, but it's managed by Paxos. Not sure about others. So that's the reason why I picked USDC. But that's a trade I'm willing to do, and I'm willing to take some risk that this is not US, this is not FDIC insured. This company is not FDIC insured. The other risk is this company is a centralized, it's not a decentralized platform, right? The other risk which remains the same is like, hey, whatever is the risk with the bank. One day bank decides to shut down or not allowing me to withdraw my money, the same risk will stay here because this is a centralized company. So probably we jumped on way forward on, which is called C-DeFi, right? Centralized, decentralized finance. This is where it is. Not everyone is very comfortable with the decentralized finance. The moment I bring up this Aave page, and there will be questions around, okay, how do we create an account? What do I need to have a wallet? How do I deposit it? And if you make a mistake, you're on your own. There is no 1-800 number that you can call. And those who are just starting off, they may not be comfortable in dealing with this. So maybe the baby step is, it's like your bank, but operating in crypto economy. But right now, not FDIC insured for now. Okay. Hope that makes sense, Leonard. So, okay. So when you're looking to do this DeFi stuff, right? How to stay safe, or what kind of issues that you might run into? Right? What are the risks? Number one, it is not completely anonymous. Some users get attracted to DeFi thinking it is completely anonymous. I can use it, say, for laundering, money laundering, or some other nefarious purposes. But we know that blockchains inherently, especially if you're using, Ethereum or Bitcoin, they all are open blockchains, public blockchains. Right? They're not as anonymous as people thought it would be. Right? So government agencies, they can follow crypto transaction from one address to another one and figure out where, how the money is moving. There are ways to get around it. I won't be discussing that here, but just understand, as an old person, it's not completely anonymous. Second risk is risk of, a personal risk, like we just talked about. If you make a mistake in this Aave, say you wanted to borrow only $1,000, but by mistake you put in, you can't even borrow more than the value of collateral, so it won't even let you do it. But say you wanted to send someone 1,000, and by mistake you put in, again, there are different protocols which allow you to send or borrow money, or borrow an asset, right? Or buy an asset. Instead of 1,000, if I put in 10,000, there's no way the transaction would be reversed. And we've seen some, I think there was one case around on the NFT, in which a user actually wanted to buy NFT, and instead of putting the dot, he ended up putting a comma, and probably paid. That was a very expensive, almost, I guess it was $500,000 or 250K worth of lesson learned. But once the transaction is cleared, or once it goes, there is no way to reverse it. Right? So there's no way to get the funds back. So you have to be really, really careful when you're dealing with these DeFi platforms. What's the other risk when you're dealing with DeFi? Maybe regulators can come and shut it down. Like Aave is a decentralized one. Today in US, the regulations are not really very clear. We don't even have a proper regulations around the DeFi exchanges, right? So they may come and try to shut this down. That's another. The other one is vulnerabilities in the code. And this is the most important one. There are many more DeFi platforms which would offer you, this is offering 4%, right? Or yeah, 3%. There are other platforms, new and upcoming platforms, that probably are willing to give it 20%. But there's a risk on them. those platforms haven't been battle tested, could get hacked. Your funds could be stolen. There's a reason why they're offering 20%, because they want to attract more investors to increase the asset under management so that they can invite more investors, so that they can increase the AUM, so that they can invest more, attract more investors, and hence grow their platform, and then continue the spending on building the platform. But do I want to be the first one in sponsoring their learning curve? Probably not. So the vulnerabilities in the code is the most important one and the riskiest one that I see. And the hacks have happened. Till now, almost if I was looking at the stats right now, I think it's almost $9 billion worth of hacks have happened. And scammers have, or the hackers have, taken of the assets or stolen the assets over the lifetime of I would say crypto asset economy. And you search for it, you'll find it. There are multiple examples of these hacks happening. The most famous come to my mind is like something, I think Poly Network, $600 million worth of hack. It happened last year. Recently, there was a vulnerability discovered. Good that it was discovered before by a white hat hacker, before someone could have hacked in Polygon. So it's pretty common. So you got to be careful around what platform do you want to use for your DeFi purposes. Other risk is lack of liquidity. So you brought up this SUSDT. I don't know how liquid is that market is, because more important is, if there is no liquidity, if I want to sell, if there is no one else to buy from me, then I won't be able to sell my assets. Right? The same thing happened on the stock side. Then there are other, which is like flash loan attacks, a little more sophisticated ones, in which someone can actually take $1 billion worth of a flash loan and then bring a value of a particular coin down, and then close out the flash loan. So not too often, but not out of a reach. So the way to minimize is stick to tried and tested DeFi platforms. So I don't want to go and stake my assets on some new platform which I never heard of, which probably will be giving a lot more APY to me, as a BiFi or Derivadex. I don't even know what these are, right? I want to stick to the few top platforms. Uniswap, been around for years, pretty standard. Compound, Aave, Instadat basically was a copy. They recently released a copy of Uniswap. Stay around with the platforms which are got big liquidity, or the top ones. Tried and tested. Make sure that this platform has been around for some time. Probably the hackers would have already tried to hack it, and this has been battle tested. Or the next is, we're not comfortable in taking the whole custody, doing everything on our own. That's okay. We need some assistance. That's where the CDeFi will come in, right? This is your mezzanine floor before we move up from a ground floor to the top floors. This works just like closer to how your bank would. Now, this brings together the best that a centralized finance and the decentralized finance has to offer. The things like Celsius we looked at. This is not completely decentralized. There is another one, BlockFi, similar to Celsius. Crypto-backed loans or interest accounts. Where are the percentages? Okay, let's see. Where can I see their rates?
What is the difference between BlockFi and FTX?
Sorry?
What is the difference between BlockFi and FTX?
So BlockFi is not an exchange. This is like your just like your banks in which you can deposit or you can borrow. If I deposit Bitcoin in BlockFi, they give me 4.5%. But it means I'm giving away my Bitcoins to BlockFi. Do I want to do that? You have to be comfortable. It's like giving, it's a centralized one. It's not a decentralized. So I'm dependent upon this company's management to make sure that they hold my assets safely.
Okay, but then if you are lending it, let's say that you're lending $1,000 worth of Bitcoin, and at 4%, it's paying you 4% on $1,000. What happens when your Bitcoin value goes up to $2,000 in value? Do they give you 4% on $2,000 worth, or is it locked in at the 1,000 price?
Good question. I didn't even check it out. Well, that's a great question. Yeah, frankly, I don't know. I have to check how that works because I never deposited my this crypto asset.
In any of these exchanges where you're locking it up for a return, then when the price of it goes up, you said if the price goes down, they could liquidate you. If the price goes up, because there's some sort of benefit to us. I mean, we still, whenever we take it out, it's ours. We can take it out, the same number of Bitcoins. And then if it's worth more money, we could sell it for more, right?
So I think that would be the way to have it because, for example, this 4.5% APY, you can choose whether you want to get it back in Bitcoin itself, right? So say if you choose to get it in a Bitcoin value has gone up, you can always sell it and convert it into USDC. So I believe if the Bitcoin value goes up, the amount of the dollar value that you receive as the APY will also go up, right? I can choose to just get my return in Bitcoin itself, right? So if I've say invested 1 Bitcoin today, I don't know what, let's say it's $40,000, and I'm earning an APY of 4.5%. Right? And if this is paid, I think this is paid monthly or bi-weekly, you receive as an interest every bi-week or every month. And I keep on getting those additional Bitcoins as an interest, and the Bitcoin values keep going up, the value of those interests keep going up. So yeah, if the value of your holding go up, the corresponding, the interest or the return that you receive also goes up.
Because you're getting 4% of something worth more money.
Yeah, so you're getting 4% on something which is now worth more. Exactly. Right. The other one is again the similar, like is an Celsius. You got a USDCs out here, 8%, 9%. And there is another one called Nexo, not Nexo. See, but Nexo is generally, I don't think you get the best returns if you're a US investor. But outside the US, this is pretty popular in Europe and other countries outside of the US. There are some restrictions on if you're a US based user, what you can and what percentage you can get or you cannot get.
Why are they calling this a crypto wallet? I mean, what is the difference between an exchange, a crypto wallet, or some place that you're getting a return on investment.
So the wallet is, I don't know, I think Nexo already have their wallet. They are a little more than just the BlockFi stuff. Eventually, I guess BlockFi will also move into allowing you to swap the assets. But eventually, here's my opinion. I think the line will, the different, the lines will blur between an exchange or a bank. Now look at a Coinbase is an exchange, but they are also wanted to bring up this product, the lend product, right? In which I can go and lend my coins to Coinbase and earn some interest on it. But different matter, SEC give them a slap and they couldn't do it. That's a different one. But future, I guess, as companies, grow their base and get more money, eventually they'll start to do everything. So Nexo is already, like I said, it's a big one outside of the US.
And what is, see, the thing that confuses me about it, calling it a wallet, is that I know Binance, in order to put money in Binance, you put it in the Binance wallet. And then from your wallet, then you can go ahead and buy the coins in Binance. But then there's some other coins that you can't buy in Binance, but you have to put something in your coins in something called MetaMask, which is another kind of wallet that sort of lets you swap between different exchanges to go ahead and buy and sell. So I'm not really clear on.
So MetaMask. So MetaMask is a wallet that works on Ethereum blockchain. Binance works on a Binance Smart Chain. So if you want to buy something which is an Ethereum token, then you need a wallet that works with the Ethereum chain. That's where the MetaMask will come into picture. But we're buying a token which is sold on, is a token created on a Binance Smart Chain. That's where you need a Binance wallet. Right? But from an exchange perspective, not the wallet perspective, but from an exchange perspective, it's Coinbase. I can go and buy Bitcoin, I can go buy Ethereum, I can go buy anything. But when it comes to wallet, many of these wallets are tied to a particular blockchain. So the MetaMask is tied to Ethereum blockchain. It also works with, as and when new exchanges are coming in, they are also adding support for other exchanges. Other blockchains, not the exchanges, but other blockchains. So I would see, maybe some point of time later, maybe MetaMask will start to support Avalanche. But today, if I were to do anything on Avalanche, DeFi on Avalanche blockchain, then I would need an Avalanche wallet, which is, which one? There will be some wallet from Avalanche. I don't know what it's called. But similarly, there's I think Solana has got a Phantom wallet is from Solana. Oh no, that's a bridge, Solana wallet. So these are different blockchains. If you need, let's say probably they'll have wallet guides here or mobile app wallets. There we go. Web wallets, mobile app wallets. Bitkey Phantom. Yeah, Phantom. Sorry, I misspelled the FAN, but this is PHAN. So if you want to do a DeFi, there's a DeFi exchange which is built on Solana blockchain. To interact with that, you will need a wallet which works with Solana blockchain. Now, Aave is an Ethereum-based blockchain. To interact with Aave, you will need MetaMask. That's why I have MetaMask, because I'm working with Aave. So that's the difference. Why the wallets, there are different wallets, and why you have to switch from Binance, because you are interacting with the DeFi, which has been built on a Binance blockchain. And then that works with the Binance wallet.
So I have a question about what you just said.
Mhm.
This is so confusing. Then is what tools are there available to be able to track I mean, I have my credit union, I have my different credit cards, I have my IRA. So, and that's complicated enough about all those things, permutations there. But when you get to this level here of complexity, where do are you familiar with a site called Mint.com?
I had spent more than a decade in building products like Mint.com. Mint was my customer. So we provided the technology to Mint.
Okay, so Mint sort of helps me track what's going on with all my credit cards.
Exactly. I mean, there's the account aggregators, right?
Okay, so then let me ask you this. I don't mind hooking up my Mint to all my credit cards, because if somehow Mint, charge something my credit card, I know I can go to my credit card companies and they will fix it, right? Is it safe for me to hook up my bank account to Mint?
Yes. Again, now Mint has moved away from our platform, so I can't talk, because after they got bought over by Intuit, they moved over to Intuit. So I can't talk about how secure the Intuit platform is, but I can talk about something which in my previous life we worked on. These account aggregators are pretty secure in terms of, because all these are get regulated by OCC. So we had OCC officials coming into our office and auditing our practices, because I worked for an account aggregator company building Mint-like solutions. So from that perspective, you would consider the level of security is equivalent to your bank security. So for example, not just Mint.com, right? Bank of America provides a similar solution what Mint.com provides.
Bank of what?
Bank of America.
Oh, okay, Bank of America.
It provides a account aggregation solution. It's called My Portfolio. And the vendor that they work with, they make sure it has at the same level of security what Bank of America has. They won't work with any vendor who would, be less secure than what the banks are. So generally, I think Mint.com uses Intuit. Intuit is, the company behind TurboTax. So I'm okay with Mint.com being an account aggregator. A lot of companies use Play.
When you say you're okay, you mean that you trust their security?
I would trust it, yes, because the company behind them is Intuit, which is the company behind TurboTax.
Okay. So thanks. That helps me as far as to hook up my bank, so I have a bigger picture of my credit cards and my banks. But then, how do I, as I'm learning, I've got, like you said, for me to learn DeFi and all the different ways that you can invest and buy cryptocurrency, and you buy it at one to even remember how much you spent on it when you bought in, and what is my portfolio like I have with Mint for my credit cards? How do I track a portfolio of all these different permutations of cryptocurrencies and cryptocurrency services?
Yeah, so
I heard just one last thing. Someone said that CoinGecko does that, but I signed up for that. I couldn't see how to use it.
Yeah, so I think, so this is because this economy is so new. Our bank accounts have been there for more than 100 years. And we started getting these account aggregators, I would say, in last 10, 15 years. So it will take time, but there are many projects who are working on to become an account aggregator for your crypto assets. So I just pulled in a Medium.com article. So it looks like there are few. Now, at this point of it looks like Coin Market Cap has this.
What did you search? What was the search term you searched for this?
I just searched for account aggregators, crypto account aggregator. Again, this economy is so new that we probably may not even have all the solutions. So there are some projects. Now Coinbase is trying to become one. So they already acquired one account aggregator company in August. Right? They acquired the Zabo. So it will take some time until before that, I just want them to give me a 1099. Today, they don't even do that. For their own account, they don't tell me how much I made or lost at the end of a year. we have to take care of ourselves from a taxation perspective. I mean, account aggregation is the next step, is a step further than that. But yeah, this ecosystem will grow. Not there yet.
So you're saying that the next step of coin aggregators is one that would help you track your tax exposure?
I don't know in terms of what level would they go in, right? So for taxation, I think there is already one website with coin list, coin tracker, plus a coin tax tracker. So let me just, there is one which I know, coin tracker. So coin tracker allow you to connect your wallets, and they will figure out and it'll give you a portfolio view and also tell you what your tax liability could be. Right. This is again a VC funded company. It's a pretty small company, but I think they have a decent funding. They're building this product again to address the same issue which you mentioned. Is I done a bunch of transactions and I open an account in Coinbase. I have it on Bitcoin, on Binance, and maybe I'm doing some DeFi. How do we keep track of what I bought, what I sold, how much do I owe? So there are companies which are building solutions on it. Coin Tracker is the name which is more familiar than the others, but probably there are others as well. Looks like CoinLee is there. So there are others, but I don't think any of the big ones have been there yet. These are the startups. So it will take time for them to become mainstream. First of all, the crypto itself is not mainstream right now.
And now with an accumulator, we could hook up what we own where they're not able to do any transaction. They're just able to monitor it. Is that how it's?
That's what aggregators are supposed to do. I don't know whether they can even, they are actually doing it from a tax perspective, or are they just bringing all your information in one place and telling you, okay, this is what you own at different sites, right? For example, Mint.com doesn't do any taxation, but if you have 4 bank accounts and 6 credit cards, they will bring all together and tell you how much did you spend on food across your 6 credit cards. But they don't tell you, okay, how much is the tax deductions.
Right.
So similar could be on a crypto aggregators could be, they might tell you, if you have 4 different wallets, you have accounts in few exchanges, they'll tell you, okay, overall your Bitcoin holding is this across all your accounts. So that depends on what each of these companies are building, what kind of solutions they are building. But we are way early. I mean, first crypto has to become mainstream, then the demand for this will grow. But there are companies who are trying to build solutions for this, looking forward. And I agree with it. It's right now it's cumbersome, and that is why I don't generally. It works for me because I don't trade often. So it's not that I'm getting in and out and trying to figuring out tax liabilities. So for now, it's not a problem for me. But if someone is actually being actively trading, then yeah, you gotta either work with this coin tracker or some similar resource, or you keep track of yourself when you bought, what you sold. Because these exchanges are not giving us 1099s. Stock exchanges are regulated. They all give us 1099s by law. They have to give us. These crypto exchanges, they don't. So onus is on us.
What about you're familiar with bots, even though you may not be working with them, but a bot is automatically buying and selling continuously through some parameters, doing all the work for us while we go on with our life.
Yeah.
But if it's buying and selling, does that mean that every time it's incurring some profit, it's incurring a tax liability?
Yeah, it's a capital asset. As per US IRS, I'm not a tax professional, but IRS consider crypto asset as a capital asset. If you buy
but like with a stock, you don't have to go ahead and pay interest are taxed unless you sell it and cash out, right? I mean, if a stock goes from 1,000 to 2,000, you don't owe $1,000 worth of taxes unless you sell it.
Yeah, same is the case here. If you buy, let's say, Bitcoin, and say if at $1,000 you sell it for 2,000, you incur $1,000 tax liability. What's different here is you buy a Bitcoin for 1,000, you convert that Bitcoin into Ethereum. You still and the Bitcoin was at 2,000. You still have $1,000 as your tax liability.
Okay, but my question is, with the bots, is that happening also with the bots that are going and they're doing micro increments, buying and selling?
Yeah,
If you make,
you'd incur the same taxes as if you were doing the same thing that you're describing with stock. If you had picked a stock and you had a bot trading it the same way you were trading, you're suggesting to trade your cryptocurrency, you're going to incur the same tax liability.
exactly. There's no difference whether it's a manual person sitting and clicking it or whether it's a bot who's doing it. If it is a profitable transaction, we owe tax on it. Stock and crypto taxation rules are a little different, so gotta be careful around that. But yeah, any profit made is, we gotta keep track of it ourselves.
I see. So those people who, when they're talking about knowing when to buy the dips and sell at the highs, they're not talking about that you've just incurred a tax liability when they're talking about that strategy.
I mean, I think that probably it is inherently understood that if you make any profits, the government is gonna IRS will come here and say, okay, give me my share. They won't sit on the side. They'll tell you, okay, give me my share, you made some money. So they're selling bots, they're not selling the tax strategy. So the idea is, if you, instead of you doing it manually, there is a automated piece of code that is helping you to do that. That's the only difference. No difference from taxation perspective. Same thing applies, like Wendy said, same thing applies for stock, same thing applies for crypto asset. All right, I think, yeah, we are almost done with our time. And yeah, last few thing is, instead of like DeFi could be challenging, not challenging, it could be intimidating to begin with. Well, I'll live with the centralized crypto companies like BlockFi or Celsius or Nexo. Whole my life I've dealt with financial institutions which are centralized. I'm okay to take that risk. I'm okay to take the risk that these are not FDIC insured, but gives me 8%, which is way higher than what my banks give me. And I'm willing to take that risk. Go to a centralized DeFi platforms. So we looked at a few.
Is that what CE stands for, is centralized DeFi?
So CE, centralized, it's a kind of an oxymoron term because we're talking about centralized and the DeFi in single one. But they say, yeah, CE DeFi, centralized DeFi. Not really, it's a DeFi, but because it deals with crypto, that's why the name they're saying is a DeFi. Right? Yeah, lastly, what cryptos you want to invest in? And there is always a question of, hey, which product should we look at? Better do your own research. Browse through the website, look at the white papers. When was it? I think a few weeks ago, we looked at a project and I shared this checklist. We went through this checklist. Probably we'll do the next one, then we'll add it another. But this is a checklist that I go through it when I'm trying to evaluate any project. It's the same work that we do on a stock. It's no difference. Focus on business, right? What's the white paper? Information on a project. What's the scope? What are they doing? What's their roadmap? What's the competitive advantage? Why this would succeed, let's say, against Ethereum or Avalanche? There are tons of solutions, right? What's the tokenomics?
Okay, these things that you're talking about here, when you said before investing in something, look at, the do the homework on it. It seems to me like for a newbie, what we should be doing is doing homework on finding people like you who knows what all this stuff means. So that if you look at this, like I didn't, I've been watching this crypto stuff for a couple years, and this is the first time that all of a sudden it occurs to me from watching stuff you're saying that bots are incurring tax liability of, while making micro amounts of money. And so looking at this stuff, I don't know what I don't know. So you look for someone that has the reliability factors. I think that a newbie should find someone who knows how to look at this stuff like you and say, okay, which are the ones you feel confident in, and find people, like aggregate people who are knowledgeable, smart like you, and find people like you who know how to not only find the white papers, but understand them.
I appreciate your kind words. But again, I would still say, do your own research, maybe borrow ideas from me. And I think I said in my Saturday class also, when we talk about the stocks, you can always borrow great ideas. You can always borrow stock ideas, crypto ideas, but you have to build your own conviction, right? And so we do this exercise together. I mean, when we reviewed Phantasma, I forgot which week we actually did this. And I asked the team on, hey, which one you want me to review? We could do this together. Again, I'm just one person. I got along with, I can't find if not on full time on this one. So I only have a little bit amount of a time, but we can all do this together. I just want to make sure I go through a structured way. Yeah, we did it on 9th in this bid up, and went through this checklist. We created a checklist, went through it, and want to use that going forward. But again, people ask me, how do you find out a great project? It needs hard work. I can look into the market and see what's hot in the market. It's just like same stuff how I evaluate stocks. You do stock investment. You can run after what's right now hot in the market and invest in it. That's fine too. I'm not that kind of an investor. I can put some gamble money, that's fine. But I want to learn about the business of the company. I want to learn how they've done. We have a stock checklist. Just that crypto is so new, there are some different things that apply to crypto, like tokenomics. This doesn't apply to stocks, or maybe a little bit in terms of their shareholding pattern. But TVL doesn't apply to stocks, but does apply to crypto. So, we're building our checklist. So, yeah. So again, spend some time in learning about the project, going through white paper. May not have to do this detailed one, but at least create your own checklist, what you want to know about, what makes you comfortable in the project, right? And always, you can borrow ideas from me. Join the session, we can talk about any project and can do a deep dive in that project at this level. I'm always ready to do it. If you have some project that you want to focus on, let me know. And maybe in the next session, we can actually go through together to evaluate a project and see how that, that scores on these categories. Cool. I think that's it for today. Hopefully you gained something from today's session. I'm always excited to be here. One reason is, I got to do my homework, means I will learn something this week so that I can talk about it in this meeting. So that keeps me up to date on what's happening in this markets. Cool. Any last minute questions?
Thank you. Thank you very much. Happy New Year.
To you as well. All right, I guess that's it. So if you're interested on the stock, we talk about stocks on Saturday, 10 a.m. Similar stuff. Focus on becoming a better investor in stock market. Thursdays, we talk about how to deal with the crypto markets. So with that, hopefully you have a wonderful evening, and I'll talk to you some of you on Saturday. Otherwise, we'll talk again on next Thursday.
Thank
Good
you
night,
very much.
everyone.
Good night.
Bye.